Good morning, my friends. Oh my goodness. 6:09 in the morning, Pacific time. Got another day, another good inflation report. Let's take a look at this. We'll take a look at what's going on today. Go through our setup process. Look back at yesterday. Missed a really good one yesterday. Oh, that's the thing. Obviously I work a full-time job. I'm actually a very busy mortgage guy. Passion for trading. Love it. Been doing it for years. Finally started getting good at it. It's taken so long. And this is the final step, I believe, in my trading evolution, which is to record the live trade. So I said, you know what? Why not just live stream it? People want to check it out? You want to see what's going on? Let's do it. All right. Hold myself accountable. Let's take a look here. So initial jobless claims a little bit lower. Producer price index. Expectations 0.2. We got 0.1. Not too bad. Not too shabby. Core PPI year over year also down. So nothing crazy. Nothing crazy. We had good data yesterday too. Remember that? CPI also lower than expected, and expectations are pretty low. Year over year was also down. Core was also down year over year. So we've got good inflation reports coming in. We got money flowing into bonds here early in the morning. Let's get a refresh on this quick. And keep an eye on the bond market, not just for mortgage rates, because I'm a mortgage guy, but also just kind of keep on the flow of money. Sometimes we see a lot of money will start flowing into the bond market right before stocks take a little dippy dip. All right, well, that's working on it. That's site. I'm sorry, MBS Live. You guys need to fix your shit. It's always so hard to refresh. Takes forever. All right, so let's take a quick look at the 5:30 candle or the 8:30 candle. We're going to use New York time right here. Hopefully this is easier to see today than it was yesterday. That was one thing that I'm really trying to accomplish today, is to have this be a little bit more easily visible. I've changed up my color scheme and everything. All right, we don't really look at the overnight. Not really a big deal, but do look at that ICT London timeframe. And interestingly, right at the 2 a.m. mark, Eastern time, our low there was just a little bit lower than the PM high yesterday. So technically, we would go here and go, oops. This is our London low. I'm going to mark that. This area here is a liquidity draw. So I want to keep an eye on that. And then look here, 5 o'clock. Actually, the exact same high as the AM high yesterday. So those two numbers factoring in, I expect that we'll probably take both of those levels of liquidity today once the market opens. We're going to look at it at 9:30 Eastern. And so we'll see how that looks. The interesting thing, though, here, the 8:30 candle today, so this is the data candle, didn't really fire off anything too great. Now, it hasn't been bearish. You got a wick down. You got a little liquidity grab. Nothing crazy. Setting up to be a choppy day. Why is that? Well, we are in a monthly bearish order block. So let's do our top down, and then we'll look at yesterday because we got time. We got 17 minutes before the market opens. Not going to take a trade until at least then. So let's take a look. Let's go to the monthly. Reset the chat. You can see the raging bull market we've been in since 2009 on that. Okay, let's get rid of the kill zones too. That kind of throws off. There we go. All right, let's get a closer look at the monthly here and this sort of chop that we've been in. All-time high was January 22, but just barely. And so we would give this guy right here, this would be our bearish bearish order block. And you can see we're encroaching on that. Now, if we go to the, let's go from there to the weekly. Well, it looks like some of I switched the thing. It looks like some of these lines got moved. Bizarro world. I have to go through and check all that stuff again. But anyway, we'll go to the weekly. We are sort of marching higher here. Now, it does look like a stair step. Or sort of a controlled channel. Just look at this. Let's get the wicks out of there. If you take the wicks out, right? A lot of times that is going to lead you to selling. So we know we're in this monthly order block, bearish order block. It's from December of 2021, so it's old. We were inside of it, so we got to remember that. That's where we're at. In other words, there's major resistance here. So we've got good news the past couple of days. Didn't really go anywhere yesterday. It wasn't terrible. Didn't really get a big move. It wasn't a real big rally. There was actually a big sell-off. We'll look at that in a second. The humongous trade, piece of cake trade for my setup that I missed because I was working. But that's the way it is, you know, for working guys like us to trade in the mornings, just have a short window to do it. We're very clear of the 21 EMA here, so it's still bullish. At the end of the day, it's still bullish. Are we trying to go and make a new all-time high? Is that what we're doing? Let's do one more thing here on the weekly. Just for fun. I'm not a Fibonacci guy. I don't trade Fibonacci's or anything like that. But I do like to see sometimes because it tells me where we're at. In other words, if you get a reversal off a 236 or a 382, if the market front runs those areas, you know that's telling you something very strong. Right now, we are really close to the 702, which is just like a magic Fibonacci number. It's directly between, it's the midpoint between the 618 and the 786. And we're really, really close to that, which would actually coincide very well. So 45.38. Also, remember yesterday, I called 45.35 as an area that we would be likely to touch. We did not. We did not touch it yesterday. We got within about 10 points. So we could go and grab the liquidity that's up there, touch both of this channel and the 702 at 45.38. So I'm just going to have that number on our radar when it comes down to it. Also, there is, see, yeah, it moved this. Oh, that's interesting. I have to pay very close attention to that. This line should be here. Sometimes TradingView, this is why you got to double check your stuff. Sometimes TradingView moves stuff. The lines don't stay where they're, if you make enough changes. I changed the whole scheme here yesterday, so it kind of looks like that's what happened. But long story short, 45.38 is a number we're going to keep a very close eye on today for rejection at. It does look bullish. You can't argue with that, but we're channeling, you know, this controlled channel higher usually means they're selling on the way. So we've got good news. Not really seeing a big positive reaction out of it. Leads me to believe that something is up. He's trying to trick us. He's always trying to trick us. But it's kind of hard to argue with that, right? It's kind of hard to argue with that. Overall, on the daily here, sellers not getting respect. You got a bullish order block right here, right in this area here. That guy, that's a bullish order block. Nice one too, really the ideal one. And you know, you get confirmation with the move higher here. Just comes down and touches it just barely, and then off to the races. Doesn't touch it again. This actually looks like an order block too, even though it's a green candle. It's bouncing out of there. Every time it's gotten into there, we bounced out. So orders here, lots of support down here. So it would seem breach this high, no problem. Big day, punch through it, and here we go. Look at us now, Off to the races. All right, again, not a big fib guy, but I want to see if we've gotten to certain levels or if we haven't yet, because the algos do like fibs. All right, so we've comfortably beat the 1272 here. All of these lines are liquidity lines, by the way. That's why they remain these dotted lines. We've reached the 1272 after initial rejection there, and we're pushing higher. Look at this, 4532, 414. What did we say earlier? 4538, 4538, 4532. These are numbers we're going to keep an eye on. These are numbers we're going to keep an eye on. So from yesterday, we have 40, 4535. It was liquidity zone. 4532 is a fib. 4538 also showing up on the fib and that channel. There's going to be a lot of resistance there. Doesn't mean you can't punch through it, but might get an initial rejection. And I like a head start. Anytime I can get a head start on a trade, if I have a setup and I know there's a, all right, let's look at the 4 hour, then I'll take a head start anytime. Here's a 4 hour. Starts to look a little bit more, a nice big fair value gap here from yesterday. Look at that. Okay, and that's on the liquidity draw right there at 44.96. A monthly bearish order block right there that we punching through, and we're inside of at the moment. Just kind of looks like it wants to go so much higher, doesn't it? Get down to the 1 hour, and you can see 21 EMA. 21 EMA is a secret sauce. It's a total cheat code for a trending market. Obviously, choppy markets, nothing's a cheat code, but 21 EMA, electronic trading hours, will show you stuff. It will show you things, and you can see here when the market's bouncing off of it, that's a really, really good sign. Like when you see this, see those kinds of wicks right there, you can just buy. If it's on the other side, you're gonna sell it, and that's totally okay. You could just trade the 21 EMA probably. Not my strategy, but let's get the kill zones back in here so I can see. Now that I've changed my color scheme on those, I might need to make this a little bit something different. There we go. Just kind of see the days that way. All right, so 1 hour indecision candle, see how that's not looking super stoked here. We'll also take a look at the 15-minute. I'll go back to the 5. We got 8 minutes before an opening trade potential sets up. So above, we're above the 21 EMA on the 1 hour, on the 15-minute, pretty much on everything. Which means I won't be looking for a short here, most likely. Boy, we would need a real interesting next couple of candles if we were going to take a short. Here's the 5-minute. And you can see, all right. So on this candle, let me get a drawing tool out. The market will tell you things. People don't like these sort of big candles, but I'll tell you, they do show you something. I mean, if we just look here at the entire day, so going back to midnight Eastern, this 530 candle went up and completely disrespected sellers, right? Grabbed liquidity from both of these areas before going lower. Okay, now down here you'd say, oh, well, it did the same thing to buyers. Look, buyers right here, buyers right here. Yeah, but it also held this order block right here, that bullish order block. That held. So we've got sellers getting disrespected and buyers being respected. Another reason to have a long bias. So I typically just use this analysis to trade the open, which I'll take 2 or 3 times a week. If there's a setup, there's no setup, just don't take it. We wait for the silver bullet, 10 a.m. to 11 a.m. hour. I'm trying to get my mind wrapped around Eastern times. recently made that switch so that I'm not so confused. Now, these liquidity zones from yesterday, I'm not going to consider them swept in the overnight. I'm going to wait until we get into the actual session. If we open above it, you know, at the open, then okay, then I'll remove it. But if we don't, like this is a PM high from yesterday, which is very likely at this point. I think, yeah, we can just go ahead and delete this. We're going to definitely open above that. And so let's take a look. Let's get a drawing tool out here. What are we keying off of right at this moment? Bullish order block right here. Biggie. Come down and we tap that. It wouldn't be too surprising to me if the 630 candle comes down and touches this again. That would be a place to buy it. 23. So we bought at 23. Stop would be at 18. So you get some protection there. Looking very slow and choppy, though. Don't love that. See, in a range from here to here. And slow action. Slow price action. A bit easier to see. Trying to work on making this easier to see. I usually zoom out pretty good. We'll take a trade right at the open. If, for example, if price were to, during this candle, which is going to be the last one before the open candle, if this one were actually going the other way and it was coming down and was in here and it opened anywhere in here, I would just open market by the open. If it's not going to do that, if we're going to go up here and it's going to say close somewhere above here, then I would actually be looking to put an order right here, 25.5, probably 25 even. Right in there. If it closes above this, we create a new bullish order block here. Not an ideal one, more of a continuation one, but right above the 21 EMA. 21 EMA again. Trust in this, you know, even though this looks like, oh man, it kind of looks like we're topping out. We have some, you know, some big wicks on the tops here. It's true. It is true. But we do have good news. We do have good news for inflation. Should send things higher. Didn't yesterday. We didn't get a chance to review that yesterday, but man, as we can go over here real quick, we have a couple minutes. Let's see what happened. So yesterday we longed. We got a short signal. So if I'm long and I get a short signal, I don't reverse. I don't sell and then sell again. I just get out. And so that's what happened. So we were long, got the short signal, got out, and then look what happened. Perfection. Break a structure. Okay. So we have higher low, higher low, higher low, and then boom, structure was broken. Fair value gap right here. Price returned exactly to it. And if you didn't get it here, you got the chance to get it here. And then look at that. Just scorched lower. So painful to see that happened literally right when I started work for the day and was no longer trading. What are you going to do? What are you going to do? All right, so getting a push higher here. It's not too odd that on these big data days that I don't get a great opening trade set up. It's not too weird. So if we don't get it, that doesn't look like we're going to. Okay, it's nice to see that breached. If we don't get it, let's see. If we take 25, then our stop's at 20. All right, let's see what happens. Yeah, see, it's not closing above. Or, well, I don't know, 30 seconds left. Here comes the volume. Now it looks like it will close above. Indecisive market, though. This is not ideal. Not ideal. So we don't have a reason here. 4 seconds to go. We don't have a reason to mark it by the open. So we're going to take a look and see what happens here. Pretty big rejection there. So this first candle can tell you a lot. It could be the subject candle. It could be the confirmation candle. It looks like it's looking like long is the way to go, though. Currently, bullish order block is holding. This sort of mini one here is currently holding. Price were to get down here to 23. That would be even more enticing. Now we're getting a bounce. It's just AM high, which we can officially delete now. So this is why I'm not taking anything at the moment. This could easily be a confirmation candle short. So we got, this could be, in other words, a 625 candle could be a bearish order block. So we got a battle right now. Gents, we got a battle going on. Who do you think will win the battle? So this is very typical of a choppy market. Now, I don't have a confirmation that that's a bearish order block, but it looks like it could be one, right? It looks like it could be one. So we're getting a bounce out of this, which is good to see. And we were talking about long it at in that area. If it had opened in there, we would. Big shakeout. So we need to basically breach 45, 27, 25. You breach that, then you cancel out the idea really that this is some sort of bearish order block. Equal highs right there would only confirm it. So at this point would be a gamble. Not interested in gambling. Not interested in gambling. Interested in winning. There you go. Okay. So doesn't mean it can't go lower. Anything can happen. But we can say that the idea that that 625, 925 candle was a bearish order block, that idea is done for. And so our initial bias being bullish turned out to be correct. We could have taken it 23. But the setup was not ideal. It was a choppy setup. Wasn't clean. There's your 5 handles. So our stop would be a break even now. That's all right. Learn to live with it. Probably the thing I'm the most proud of all the things that I've learned in this trading journey. Being okay with missing one if it wasn't a setup for you. It wasn't your setup. So we use the 21 EMA as a very good guide, right? Price opens above that. It's almost always going to go higher. That doesn't mean that you're going to be able to take a winning trade on if you're going to have a proper risk management with a stop loss and so forth. So when you get it, when the opening candle really starts to nosedive hard after a green previous 5-minute candle, in my experience, that is not something that you want to try to long. Believe me, I've tried it. Even if you have a nice order block there, I've had this exact same setup before where I've longed it and it just cuts through me like a knife. So that's just not a great setup. If I would actually would have been more interested in taking it if it had bounced off of the 21 and, and kind of stopped there. It didn't stop there at all. It just knifed right through it. So that would have been the only way I would have been interested in it at this time. And now we're just going to wait. 'Tis a waiting game. And we're going to kind of see, is this here going to be our opening range low? Kind of think so. Look at that opening candle. Or bullish bias. So analysis, feedback. Analysis was accurate. We drew the perfect order block. Price action was just a little too ugly, a little too choppy. Well, let's see what happens. Now, if we end up with a fair value gap, as we have here, it's a little indicator I'm using. If you end up with a fair value gap here, whether it's a big one or a little one, on the opening candle, that's usually something that we can use for a trade in the silver bullet hour. Usually. Let's see here. So interesting. Got money flowing into bonds. Look at that on the bond side. A gap up. A gap up in bonds. Hallelujah. Let's do it. 30 basis points today. Interesting. Been waiting for this rally in bonds. Been waiting for it. Curious if a rally in bonds and stocks can happen simultaneously in this market. Curious. Yeah, it wouldn't have been a bad idea, I guess, but is what it is. So it's not part of my trading plan, so I didn't do it. But something I've been considering lately on these choppy days is to go ahead and take trades like these and just use a different risk management style. So instead of doing what I would normally do and look for 10 handles with a 5 handle risk potential, go, okay, well, hey, we're just going to basically bet on this order block holding, take it at 23, put the stop down here at 20. Now you're only risking 3, so you can take 5 or 6. And we would have hit that. So this is another day when I do my analysis on that, which I'm going to soon. This is another day where that would have actually worked and played out. All right, let's go ahead and get the 1 minute up. Where are you at, man? Get the 1 minute up here. Got a nice bounce out of that bullish order block there that was created. 8:50 Eastern. It just kind of looks, looks higher here. We'll be waiting about 22 minutes or so. Let's take a look at some of our favorite stocks while we're waiting. Tesla's up. Nice. Bitcoin's up. Nice. Meta is going to go up forever. That's one that I will take. Actually, really Tesla and Meta. I mean, I was making videos about buying Tesla in the low 100s and begging people to continue to sell their Tesla to me. Meta I was buying that one below $100. I was just looking at my accounts last night. I can't believe how much I'm up on Meta. Some of those, like, gosh, I feel like I almost have to sell some, up 300% on in my accounts on that. Just crazy. And just going to go up forever. There's a few reasons why. Right now, it's obviously threads. If people think that's a real threat to Twitter, it's not. People will use both. There will instantly, and there probably already is platforms that will allow you to publish to both. People will just use both. Will advertisers track to one or the other? They'll go wherever they're getting results. There's plenty of advertising money out there, though. Plenty of advertising money. I don't think it's really a threat to Twitter, but it's good for when Twitter's not, public anymore. It's private. Musk bought it. So if you want exposure to that realm of social, Meta. All right. See where we're at here. So we would have, if we would have taken that, we now would have been almost, it would have been one tick away from getting stopped out for a half target. So, all right. So the opening candle created fair value gap here. And we're currently bouncing off that. We're going to really see what's what. Now, when you get like a bearish candle like this right here, the evening stash, whatever people like to call it. Typically, if we're going to move higher, you'll see it like this with a very small red body. So very small red body on this usually means that it's not quite, going to be a tweezer top. It's not quite a big bearish rejection just yet. And I would tend to believe that we are still going to go higher here. If I had taken that trade, I would feel confident that we're going to go hit 33. Remember the numbers we talked about pre-market: 45.33 to 45.38. That's on our radar right here. And I do believe we create an opening range somewhere right below that. So the first half hour is our opening range. If let's say the opening range is like, goes up to 34, 35 or something like that, it would totally make sense if we're going to get that rejection in the 45.38 area for liquidity to be created in that area. The algos will take the price to it and then reject off of it right where we're kind of expecting a rejection. If we get there, may not get there. Turn around now. There isn't as much enthusiasm as you would expect from back-to-back days with great inflation data. But nevertheless, here we are. So we're going to see. So in other words, like, I wouldn't short this, I guess is what I'm trying to say. Even though it kind of may look like it, and if you're looking at the 1 minute, you may go, oh, that's bearish. Look, this could be a bearish order block. It could be. Could be. I mean, anything's possible. But a lot of times when you look at rejections, it's less likely to see to get a tweezer top here with the first candle looking like that. Now, if this were at a bottom and not at a top, you would actually say that's a bullish looking candle. Believe it or not. Now rejection's coming in. Okay. 29.50 seems to be a number the algos have in mind. Wow. I could feel this allergy attack coming hours ago. So algos have this 29.50 number as of this moment. Opening range high so far, 45.31.75. We're expecting rejection higher, expecting somewhere up in here. We are inside of a monthly bearish order block at the moment. I probably need to do music or something, huh? On my second stream, live trading. Yesterday was the first one. I'm probably going to do Wednesdays and Thursdays. This is part of my personal growth as a trader, to be able to go back and look at what I was thinking when I'm making decisions, to go back and look at what did I miss like I know when I'll be analyzing this for sure tonight. Was this a mistake? You know, we called this area out. I even said, I believe, I should long 45.23. I'm looking for it to come down here, and I'll long 45.23, but I didn't do it. And one of the things that's tough about this and not using an automated system, like my boy uses an automated system to trade, so he's just completely hands off. He just works on programming it, and it's pretty cool. And I'll definitely promote his system up here for people who want that. Right now, he's just demoing it to me, basically, so I'm getting the alerts. I don't know if anyone else is. But that's one thing that's hard about making decisions, is that you'll remember things that have happened to you in the past and that will influence the decision you make, right? That's just human nature. And I've seen it too many times where the 925 candle, the 5-minute candle right before the open, the final candle before the open, looks like this, is in a topping formation, and then the opening candle just nukes lower. And I've been run over multiple times taking this exact trade. So I know why I didn't take it, because I've experienced that. And we had the right initial bias for this area, and using the 21 EMA, a magic 21 EMA on the electronic trading hours. Once again, correct. Now, if you'd taken the open 26, woo-wee, and you had a 5-point stop, you would have been one tick away. But if you used like silver bullet rules, you would have got your 5 handles and you'd be done. So getting a lot of selling up here, sort of front running. That's not too uncommon. Like this actually wouldn't surprise me if this became our opening range high, and we come down, you know, maybe we come back down here after 15 minutes from now, after the 10 a.m. Candle. We came back up and swept that and got up into the area we've been talking about, and then reversed, come down and take this out. That wouldn't be too surprising. It'd be pretty normal. These big data days, though, are kind of tough. Sometimes they can be weird. Right now, I think it's a good balance because we have positive data, but we're inside of a bearish monthly order block. And although we're sort of in the lower parts of it, we haven't really gotten that far up in it. I think that overall, we have to be cautious here about selling. Yesterday was a great example of that. Yesterday was a perfect example of that. We didn't catch it on the stream. And continuing to see rejection there. And this may have just set up a bearish order block here. That's what it's kind of looking like. All right, so that may end up being our opening range high right there. Let's go back to yesterday. I mean, we were talking about this yesterday. That was the afternoon sell-off. There's a morning sell-off. Look at that. I was telling you, hey, we're in a monthly bearish order block. We have to be aware of this. And really, when I longed the open and we did make money, and that's great, maybe I should have been more patient. Something I'm wrestling with. Maybe I should have been waiting for a sell signal. If I had done that, we would have definitely caught a full target. I mean, trade worked out gorgeously. If we would have targeted the liquidity line, we would have hit that too, which would have been like 20 handles instead of 10. So, but of course, this was after I started work, so I would have missed it. But so never upset with a green day, but that's just something that I'm always trying to analyze. Now, I only take 1 or 2 trades a day. I remember back in the day when I would take 20 trades a day, literally like 15 trades a day, 11 trades a day. No more. I have a system. There's 2 trade setups I'm looking for. One is on the open, which we have essentially missed here. All right, we got to the midpoint finally of that fair value gap on the opening candle. As I said, typically, if the opening candle the opening 5-minute candle creates a fair value gap. It's something to keep close in mind. Now, it could be for an inversion, or it could be for a bounce in this case. We don't know. If price goes down and closes below it, then I will keep my eyes very closely on this area as being an area for rejection later. I do think that this is going to hold up and probably take this liquidity out as the opening range high. We're going to see shortly. What do we got? 10 minutes left on that. 10 minutes left on that. This ends up being the opening range high. Take that out, go up into that area we've been talking about. 32 to 38, 45.32 to 45.38, where we're likely to get some pretty heavy rejection. Anything can happen. You never know. Not financial advice. I'm talking this out for myself. I'm not a mentor. I'm not trying to teach you. I'm talking this out so that I don't make a mistake, so that I stay focused. But I can't argue with the fact that there's something going on here. Let me show you why it might be bullish. All right, these little downward channels like this usually lead to buying, especially if they lead you to an order block, or in this case, a fair value gap. So that could be bullish. That's not a trading setup that I trade, but something to keep in mind. You might stay in this range for a little bit. Just trying to escape on the high side and having trouble. A little bit easier to see on the 1 minute. Let's adjust it over there. Okay, there we go, right there. That's a little bit more accurate. See it better over there on the 1 minute. Look at that. Also on the 1 minute, look at the opening candle on the 1 minute. Long it. Just, when you've caught enough, tried to catch enough knives, it's a good way to get bloodied up. And so I don't think I'll beat myself up for not taking that. At the end of the day, I will go back and analyze it though, and that's the reason I'm making this video, so I have the ability to do that. Market moving pretty slow here. Kind of looks like it's trying to form a little top. Maybe we will take out the opening range low first. But it's hanging out around this area here, which I believe is going to be the opening range high. Opening range, first 30 minutes. This is not in stone yet. It won't be until we reach that 10 a.m. Eastern level. That is also a moment where I have about 1 hour left in my trading day. Enormous mosquito bite. All right. Let's get back over here. You can see how it's kind of just hanging out in that range. And that really does look like, okay, we also have the fair value gap here on the 1 minute that is holding. So good thing to probably do right here would be, it's gonna give me red, isn't it? It always gives me the wrong color I want. It just gives you the last color that you used, but always seems to be the wrong one. So there's the 5 minute fair value gap right here. Okay. And you can see how that coincides with the 1 minute. That's pretty strong, honestly. Pretty strong. Not a trade for me. So what I'm looking for is I want to see a liquidity sweep. So in this case, after 10 a.m., I want to see a liquidity sweep. So I want to see this opening range broken, or opening range low broken. And then I want to see a break of structure. So the reason why I won't take this trade is because we don't have any fair value gap, even though this structure is broken, right? We have, higher lows, then we get this lower low. Break of structure, right? It is. But the reason I wouldn't take that one, okay, so it looks like our opening range high is going to get pushed a little higher. The reason I won't take that one is because we haven't had a liquidity sweep yet. We don't even have an opening range yet. So I don't really have established liquidity at the moment to sweep. There's just nothing up here. And so I don't have that. So I need to have a liquidity zone that gets swept. And then I want to see a break of structure. So in this case, I'd want to see, a lower low on this upward movement, a clear break of structure, and then a return from there to a fair value gap or an order block to take it back the other way. So 3 steps: liquidity sweep, break of structure, and then a return to a fair value gap or an order block. Okay, so we broke out of this thing higher. And again, that makes total sense, right? That's very, very common when we have this controlled selling, to see it lead price down into an area where the algos want to buy it. They want to buy in that fair value gap. It's exactly what they've done so far. And again, this is not something I trade, but I am trying to keep track of what's taking place. Need to move our opening range high to there now. Opening range is the first 30 minutes. And so what could happen here is this could make a journey down to take out the opening range low. And then we'll be looking for a long setup. If we go and we take down the opening range low, then I'll be looking for break of structure, meaning a higher high, and then a return after that higher high is made to a bullish fair value gap or an order block. And we'll just take that if it comes. So that's now what we're looking for, because I didn't take the open trade. If we had taken it, what would have happened? When we got close to my target, would it have ended up? Yeah, we would have ended up getting stopped out at half target. So we would have had 5 handles if we had taken it. I said, I don't think I'm going to beat myself up over it, though. That was a knife catch. Don't want to make a habit of that. And sometimes, the things that we remember can be helpful to us, and sometimes the things that we remember can be hurtful to us. It's like, imagine if I had done that knife catch on the open and it worked. How many times do you think that's going to burn me down the road trying to catch knives, because I have that remembrance of, oh, well, this works. It's okay to do this. So I'm cool. I'm cool. Slow going. So ideally, what will take place here is we got 3 minutes before we can concrete in our opening range. Looks to be about 10 handles, 11 handles at the moment. Let's see. Still got a couple minutes left. Could push higher. We'll go ahead and move it if it does. If this holds, then kind of the perfect scenario is just sort of a quick liquidity grab, and then we get a break of structure. Now, break of structure here is going to mean that we have to breach that. And really probably the whole thing. Because if we're delivering from, or if price is bouncing from a fair value gap on the opening candle, that's not something that you probably want to short. That's not something you probably want to short. So we'll just take a look here. That was weird. I just see something out of the corner of my eye. That's probably not something we want to short, but If we get the break of structure, we're going to have to get something below this area anyway. So hopefully when that comes, if it comes, doesn't have to, it would actually breach this too and then bounce. And then, come back up to like a bearish fair value gap, and then we go lower and we would target below this. So we have to be careful about that if that's the case, unless it goes up into, the 45-38 area, which I think would be a pretty big rejection area based on the analysis we've done so far. Somewhere in that range, plus or minus 2 points, would be like a much nicer area, because then we could get some more structure. We get like, let's say a break of structure down like here. So then we're taking a trade up here, and then we've got room, to before we get to some of the support down here. It's slow going. It's suspicious. It really is. We got great news. Great news for the Fed to not raise rates. Although I think part of the reason why the market's being held back from going higher. Okay. Officially hit 10 a.m. So that is officially our opening range high. I think one of the reasons why it's being held back is because the Fed, the understanding and the thought is that the Fed is going to raise rates anyway. Like the inflation report, their decision is already made. They've already talked about it. They're going to raise rates at least a couple more times. So the market is just not ready to go, moon, let's do it. It's just not quite there. I need to. I need to load some music and stuff. I got some fun sound effects. This is going to be for bullish action. All we want to do is pump you up. If I take a losing trade, whenever buyers and sellers are going crazy, I got some cool sound effects. We'll use them. We will. It's also a loser. What we got here? I do not trade the Dow. What's up, Hans? You're not from that movie Die Hard, are you? So, no, I don't trade the Dow. I don't trade the NASDAQ. I just trade the S&P. For me, it's too much to try to flip back and forth on all these charts, and and there's so much more opportunity for FOMO when you feel like you missed a move and stuff like that. And so I don't trade anything, don't day trade anything, let's put it that way. Except for the ES at this time. Maybe one day that'll change. Maybe one day I'll have more time on my hands. But for now, I have a couple hours to trade, really about an hour and a half of market open to trade. I start my analysis a half hour prior. Let's take a look at bonds quick here. Yeah, money's still flowing into bonds. Hitting some resistance. A little bit of resistance there at the 50 SMA. Just leapfrogged over the 25. Gapped above that. That's a really good sign for bonds. Interest rates might drop a lot here. And as a mortgage guy, you'd think that I would want that. But rates going up or down too fast is not fun. It's just not fun. I'll spare you the explanation why, but they really don't want rates going up or down that fast. All right, we're not really close to pulling the trigger on a trade, so I'm going to give us more screen here. I can see this better. 1 minute is on the right, 5 minute is on the left. I used to trade the Dow. I started trading the Dow, or the US 30 as everyone calls it now. That was very, very beginning my trading journey. I was a complete donkey, just like everybody. Everyone starts off that way. Complete donkey. I would have taken at least 2 trades by now. But like if we had taken it 23, great place if you did take that. I didn't. I just tried to catch too many knives, so I wasn't interested. A great place to put your stop would be here, like 27. So you like lock in 4 handles here. And still feel like you have some protection. Like your stop is protected. Interesting. One thing that's interesting about the 1 minute is that you can see a little bit more clearly these imbalances, these order imbalances. It's like right here, you would expect if this candle closed here at 45, 30, 50, but the next one opens up a tick higher. Like how? You know, it just happens. It just happens sometimes. Does it really mean anything? Interestingly, it does. It does. I will look for those. And like if there is, like for example, if I was trading this right here, notice we have one right here, that would give me confidence to take it right there, to get right at that level. Especially on the flip side. So if it jumps higher, but then you get like bearish action, when we return back to that, that is a nice little hack for, you know, you can get consistent rejection from some of those little imbalances like that. It's super weird, but just remember, it's mostly computers. It's the stuff, you know, trading futures, it's you against computers. If you get to the point where you understand what the computers are trying to do, this is why I would recommend people follow the Inner Circle Trader, because I haven't seen anyone that really understands what the computers are doing better than he. Okay. Well, we might get a break of structure here. It actually looks like we're going to. We did not sweep the opening range high, but you could make an argument. Yeah, I mean, we didn't. Could make an argument that it's a very similar structure. I do not see any kind of fair value gap, but that's for sure a break of structure. So we didn't get the liquidity sweep, which would be step 1. But we now have broken this fair value gap. It has been breached. It has been covered. And that is going to generate a short bias. Now we're getting the bearish fair value gap. Okay, so let's take a look here. Let's get rid of this 5 minute. Look at that line right there, 28. Okay, we're going to keep an eye on this. Okay, so something to keep an eye on here. Why it's not time to get too bearish yet. All right, and that bearish fair value gap has been erased. This is why it'd be easier for me to show you right here. This right here, the opening candle on the 1 minute. Okay, that's a red candle. Look at that. So that is technically a bullish order block. And we just came down and we just touched it. Didn't get a huge bounce off of it, but that's something to note. We very well could. We're talking about, hey, you know, really a great thing would be if we went and swept the highs and then, you know, got the break of structure. Would it be weird if we broke structure and then swept the highs? Could happen. We're in the silver bullet hour right now. This is it. I expect a trade setup here. It's also a weird day. Back to back. You know, big data dumps. It could just be a chop fest. Oh, but look at that. See that right there? Hope you can see that. Right here. Jumped. So order and balance there. Jumped up. Guy I know that trades gold, which I don't trade. I used to get up early to trade gold at 5 a.m., 8 a.m. Eastern. Okay, now, okay, we got the jump. We got another jump. And we're actually delivering a fair value gap here. Interesting. Let's see if we actually get one when this next candle closes. So remember, we came down and touched that opening candle order block, which really hasn't delivered too much. I mean, what did it deliver? 5 handles? So it's not that impressive of an order block that we just touched, but it's something to keep in mind, something to keep us from being too bearish just yet. And you can see it right there. Always got to watch out for that. Where is price delivering from? In other words, what is it bouncing off of? In this case, right now, we have bounced off of the opening candle order block on the 1 minute, and now we've created a bullish fair value gap. Now, you could make the argument that liquidity was swept here. But the structure overall was bullish prior. Might be a chop fest, my friends, or just a wonky day. So I'm not interested in taking this long here off this. Could also be seek and destroy type situation where, we're basically just going to take liquidity out left, right. And you can actually see it on the 5 minute here, that jump. It definitely looks like it wants the opening range liquidity at a minimum. Let's see how that goes on the 5 minute. I always like to get the cues from the 5 minute during this hour if possible, because pretty much every day you get one. You get a 5 minute fair value gap during the silver bullet time frame, which is 10 to 11 Eastern. And once you get that, then you can use that as something. And notice again here, bounce right off of 21 EMA. And if you use a moving average, which I think a lot of people have one, they have their favorite moving average. 21 is the one. And I'm telling you, it really tells you what's up. And what you'll notice too, when the market's trending, you can see the manipulation with the 21 as well. And the manipulation with the 21 can also clue you into what direction, whether the algos are in a buy program or a sell program. It will frequently help sort that. All right. Come up, unable to take buy side liquidity from the opening range. Is that a ultra bearish signal or more bear bait? We shall see. I don't think I can just play music, or I need to sort that out. We should probably have some music going. Typically I would have, oh man, look, money's going into bonds for sure, guys. Breaking the 50 SMA early in the day. Could still reject, could still be a red candle. Who knows? But seeing money flow into bonds also makes me feel like there's rotation out of stocks. It just does. Makes me feel like there's going to be rotation out of stocks. Top of the fact we're in this monthly bearish order block. Lead you to belief. so interesting because I planned on doing my first 2 live trading streams yesterday and today. I planned on it a long time ago. Didn't even realize that they were gonna be huge data days. I was telling my wife, "Yeah, these are probably gonna be crazy price action days, and oh man, it's, I probably won't even take any trades. It's gonna be so bananas." They've been 2 of the most boring opens. Not that this candle was boring, but, I mean, it's not, you can't call that boring. But, the price action has been boring. Outside of that, the price action has been boring. And now that really is looking suspect, like a very suspect candle. It's trying to just draw in a bunch of buyers here, and now they're just munching up all those buyers, and the sell program is ready to take this sucker down. I think we might get double baited here. So just be careful right here. Be careful right here. Might get double baited, meaning they want to take it lower, but first you're going to take it higher. So right now they're baiting shorts. Take it higher, wipe everybody out, up into that area where we were expecting rejection. I guess we did touch the area. We said 32 to 38. We touched 32. And if that's all the further it goes, then it is pretty darn bearish. All right, so now we have pretty legit, if you look on the 1 minute, we have lower lows and we have lower highs. The only fair value gap that we've gotten so far during the silver bullet hour has been this bullish one. It's just ranging here, and now sort of hanging out more and more below the 21 EMA on the 1 minute. Just looks more and more like a sell program to me. Now we're in the AM session, 9:30 to noon Eastern. Our opening range high and our opening range low are so far untouched. We're closer to the high. That's why I expect that would be the first one we take out. But you never know. And there it is. Now we might be getting a bearish fair value gap. Was that an equal low? Got equal low there. It just looks like a sell program. That opening candle looks like bait. Bait. They wiped out all the longs and then brought them back in. Computers are it just knows what to do. Knows what to do. Create liquidity and then take it. That's what it does. Create the liquidity. Take the liquidity. No, I don't. What is it? I'm not sure. Kiddos are awake. 7:18 where I am in the morning. Nothing setting up at the moment. I'm going to go kiss my kiddos and I'll be right back. Slow action right now. Really, Jesus? Yeah, equal lows. Yeah, just kind of leaking lower. That's why choppy days are so annoying, because you can kind of tell the direction it's headed, but you don't really get a clear like entry opportunity. Still above the 21 EMA on the 5-minute. So potential setup for me. I may not get one today. I had the open, could have taken it, would have been a knife catch. Would have made half target if we'd done that. Don't like catching knives. I think we're pretty clear here. We're breaking structure to the downside. Just don't have any kind of short signal yet. I'll take a continuation trade if both the 5-minute and the 1-minute are under the 21 EMA. They're both under it, and I have some kind of order block or fair value gap to trade out of. I'll take it. But I do not have any of that at the moment. So let's see. Looks like we might get it now. So very likely would not jump in short here at this juncture. Very likely we get a bounce out of here. Create some structure. They're going to take out the opening range low first. Which isn't very far away from here. 5 points. Not a lot on the line, if you will. I'm going to, my son came in here because I told him I would give him something yesterday. Or today if he was a good boy. It's supposed to be delivered last night. See why I was saying don't short it? Not yet. Not yet. Oops. Stinking Amazon. Left the package. I ordered my son a fun toy. He's being a good boy. They left the package at someone else's house. It's not my house. Fucking idiots. How hard is it? It happens all the time. So I see this chop. Chop, 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 chop. Chop, 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 chop. Well, nothing setting up right now. I'm going to go to the neighbor's house. My wife's not going to want to do this. And there really isn't a setup. Even if we get a bearish fair value gap right here, which could happen, the setup, the trade to take in that area isn't going to happen until after a bounce down here, or liquidity sweep. And if we sweep the liquidity here, if we bounce here, then you can take it short to get the liquidity sweep. If we sweep the liquidity, then we actually be looking for a long. So it's going to be at least a few minutes. So I'll be back. All right. Where are we at? Oh, we're still nowhere. Cool. Grinding lower with no trade signals. Fun times. I got about 30 minutes left. See if we can catch something. Well, we did nail one thing. It's between 32 and 38 to look for rejection. We've gotten that. Just such a teeny tiny range here. Now, while I don't trade the NQ, I do like to look at it. Wow, look at GBTC. Giddy up. I like to look at it sometimes. Sometimes you get clear signals over there. And the NASDAQ has been leading the market. So see here, bullish. Bullish, did we get it? Was there a signal? No, not really. I mean, I guess you get the fair value gap there. Wasn't even an equal low. No break of structure here. So I wouldn't have had a legal trade, even though this, let's see. Yeah, that was prior. Today MKN went there, rejection. Yeah. On slower days like this, I've considered trading the NQ because you actually get price action. You see this movement here, that this fair value gap that preceded Silver Bullet Hour actually worked twice already. I'm over here trading the ES. You just don't know until you're there. If it's a slow poke day, Where's the gap fill? Gap fill's down at 0750, it looks like. That wouldn't be too surprising, honestly. Well, definitely the bullish structure has been broken. That's for sure. However, when we broke the structure, it just rocketed higher. It looked like we were going to go take out this liquidity. Didn't. Not again, not a clean setup, very choppy. And then we continued lower. Continued to just chop lower. Interesting. All right, now we're getting some movement. Equal lows again. And immediately covers up the fair value gap. So remember earlier, we first got this guy. So this is our servable bullet hour. Fair value gap. It's the only one we've gotten. Remember, I was looking at that like, hey, that's something we're going to want to look at later, potentially for a short opportunity. And then look at this. You can see a little better on the 5-minute. It really was an inversion. It's not what I trade. It's not my trade setup. But that inversion, I never really got a clean break from it. That inversion right there, coupled with the 21, is not a bad trade. And that's the only fair value gap that we've gotten on the ES today. So this will go down as one of those days where maybe you should have traded the NQ. Yeah, it's cleaner setup at the open too. Still a knife catch though. Probably wouldn't have taken it. I wouldn't have had the stones. Been cut too many times by those fallen knives. It's one thing you eventually do learn the lessons. Sometimes you have to get caught a few times. But you will eventually learn them. All right, so I'm not going to take a trade on the NQ, so I'm not going to look at it. And look at this. Look at it. Choposaurus Rex. Still got 30 minutes. So the Amazon saga. I ordered, my son loves Robocar Poli. It's like a cartoon on Netflix. It's actually really one of the better ones. And so I ordered him this cool, like, Robocar Poli toy set. They delivered it to the neighbors. I go over to the neighbor's house because I can tell which neighbor it is, and the package isn't there. Package isn't there. It's not that they delivered to the wrong place, but it's not even there anymore. The neighbor's nice. If she got it, then she'll give it to us. But when you leave packages on people's doorsteps in the clear blue yonder like that, not hidden at all, a lot of times there's these ruffians that just drive around and they look for just packages sitting on people's doorsteps, late in the night. They know those people aren't home and they just go up and swoop them. And Amazon also delivers really late after a lot of people go to bed. They just go and just snag it. And if they got that one, they'll be like, yeah. So it could be swooped. So now I'm getting into a chat with Amazon customer service, basically. Long story short. See, this is it. Yeah, that's it, fools. What a chop fest. Policy doesn't allow me to issue a refund or replacement until after Thursday, July 13th. So if you need a replacement right away, it's another order. Then after you can come back here for a refund if the original item is still missing. In many cases, customers do end up getting their package delivered to them by the neighbor or person who got it by mistake. Until after today. So they have to, they can't give me a refund or a replacement until after today. That's fun. And they could be right. Maybe she'll give it to us. All right. So back to a boring day on the charts. Sideways action. Remember when I said don't short down here earlier? Don't do it. Now we go take the liquidity. Can we do that? Can we take buy side, the opening range high? Can you give me a hope that'll get us set up today? I got 25 minutes. I'm not going to take it unless it's there. The chances of me getting it set up here, I think, are slim. Here we go. Digging into that opening candle. Remember, we were looking on the 1 minute. Opening candle was bearish. It was a bearish order block at 45.27. 45.27. They dug into it a little bit, got down to 45.25. But that's still producing buyers. That's why I would not short down there. Would not do it. So delivering from that order block. Now this is actually, it's getting a little pump this time. And now you could say, you know, hey, we were going lower. We did kind of sweep some liquidity here, you could say. Ish, not my setup, but could say that. And then we have a break of structure, right? So this low or this high right here, this lower high. So we have high, lower high, lower high, lower high, higher high. Boom, there's your break of structure. As soon as it goes, as soon as price gets above that, that's your break of structure. And if you get a return to this area here, and also equal highs, you can play that. It doesn't have to go by one tick. If it's literally an equal high, you can consider that a break of structure too for the purposes of my trading plan anyway. In which case, you know, you could long this. Problem is, I don't have the reason why I can't take this trade, why I'm not even looking at it. We haven't swept the opening range liquidity zone on either side yet, which means this is a chop fest where the automated system, the algos are trying to face fuck you in both directions. So I'm not interested in that at all. And so I'm just staying out. It's chop fest. Is what it is. Oh, man. Tesla now negative for the day. I actually meant to sell some Tesla shares this morning on one of my accounts. Oops. Meta's peeling back as well. Let's take a quick gander at gold. If there's anything else I would trade, it would be gold. And looking at this chart reminds me why I don't trade gold. That bearish if everybody got their order block, whatever it was, seems to be helping playing out today a little bit. Look at that. It's a chop fest. The NQ has some nice movements. So if I were trading the NQ today, don't technically get a break of structure until here. It continues all the way down here. This would be my target zone, but that's already been violated. So I don't know that I pull the trigger on that when we come back to that. This is a nice continuation pattern, by the way. If you want a good continuation setup, this particular indicator just shows you where the fair value gaps are. It just plots them on there, sort of widens the candle in the area of the fair value gap. And if you look at the fair value gap and coincide that with the 21 EMA, you'll see that a lot of times that works out. So fair value gap is in this zone right here. 21 EMA is right here. You can take that here. That will work. So like here as well, fair value gap right there, 21 EMA right here. You can take that. That's a continuation trade that I've taken many times. I've just gotten it down now to where I have so few setups. I basically have two. I'm looking to take a trade on the open, which I passed on today. Would have made a half target. It's kind of a bummer. Hate to do a whole live stream and not take a trade, but this is trading. It's not what you think it is. If you don't know that this is what it is, then it's not what you think it is. So that looks like a fake out. Over here, this looks like a fake out. Go get that opening range high, son. Get it. Get it, get it. Let's see. I don't even say the words check my emails anymore. I just say delete emails. Like if I'm going to check my email, it's actually just like, yeah, I'm going to go delete some emails. That's really what it is. While we wait to see, will we get a signal? Will we get out of the opening range? You know what? If it happens like it did yesterday, it'll just be annoying. It happens right as soon as I leave, as soon as I'm done, as soon as I get to work. Then the beautiful setups will come. So typical. The perfect setup. Oh, how many times have I told my wife at the end of the day, oh, babe, amazing setup, perfect, exactly like on the drawing board. Just happened, when I wasn't trading. So we didn't get anything. So many times. Yeah, I don't think it's going to happen. What a boring open to the market. I actually haven't seen a day like this in a long time. There's been some sideways days. There's been some pretty ugly days. Usually you can kind of see it coming. But I mean, on a day with a big data dump like this, like positive data, and just nothing. I mean, just totally being jerked around. But there's always, if you follow your plan, there's always a win for the day. I followed my plan. I did. Followed my plan. I didn't catch a knife, although it would have made me money. Sometimes that's not a good thing. If you do the wrong thing and it makes you money, then you create a bad habit out of it. I didn't catch that opening knife, even though it went to the area I wanted to buy in. So I stayed true to my plan, and that's a win. The old me would have taken so many trades in here, and who knows how many times I've been stopped out. I would have been a part of the liquidity grabs that are going on in both directions here. But no more. I am no longer that donkey. And sometimes I remember being there, though, and I remember thinking, man, one day I'll be good enough to just not trade and be like, yo, that's pimp. Way to not take a trade. Way to not trade today. Way to not lose money. And we're there now. It's just crazy. It's crazy that the opening range high and low are just intact. I expect them both to get swept, but on a day like today, it might take all day. And it might just barely get swept and then turn around. But that could create two nice trades. I mean, you do have 11 handles between the opening range low and the opening range high. So, depending, you could end up getting a couple nice trades out of it if that happens. Or if it's paint drying for the rest of the day, like it's been so far, then maybe that doesn't happen. This is what terrible price action looks like. It's an example of it. So this is a good day to exercise the discipline muscle. That's what I like to say. Good day to exercise the discipline muscle and just not do anything. Just go, you know what? I was up yesterday. I was up the day before. We're doing great. We're just going to have a push today. It's just going to be a push. And that's it. End of story. Doesn't need to be more complicated than that. I've already decided. I'm not going to be mad at myself for not taking that one. I was coming in too hot, man. This is the kind of day where if you do take a trade today, I'm going to call it, I think. But if you do take a trade today, do not expect to get like a huge runner. Do not take a huge target. Like maybe 5 handle targets today probably makes sense if you're trading the S&P. 5 or 6, but don't expect to get the 10 or the 15 or the 20s on a day like this. Don't even set a target like that. Like the chance of getting there, just not gonna get there. Like if you can grab a little bit, if you can get a piece, is that 2 ticks? What is the close of this candle? 29.25. What's the open of this candle? 29. Okay, it's only 1 tick. That looked like 2 ticks. A 2 tick jump. Like, whoa, we're gonna have to pay attention to that. That's interesting. So it actually freaked out the indicator. There's not actually a fair value gap there because this thing wicked up, but it's sort of freaked out by that. I don't know. Underneath the 21 EMA on the 1 minute, above the 21 EMA on the 5 minute. Very normal in these choppy types sessions. I think I'm going to call it. We're so far away from even, just we're still in the middle of the opening range. I would need us to go sweep liquidity, break structure, return to a fair. I mean, that's going to take too long. I got to get to work. So it is what it is. All right. Is what it is. Play it off. Exercise the discipline muscle today. No trades. You want to trade, you want to do it well, you're going to have days like today. It's going to have to. There's no way around it. Unless you want to lose, have a lot of losing days. Days like today are days where you will lose money. If you're early in your trading career, you're making impulsive decisions, you will lose money on days like today. If you're really good, learn to exercise the discipline muscle, maybe you get a quick scalp on a day like today. Maybe we could have done in the open. Maybe. Otherwise, you just say, nope. Guess what? The market will be back tomorrow. Now, I won't be live streaming tomorrow. Won't be live streaming again until Wednesday and Thursday next week. But I'll be trading every day. Maybe I'll post a recap. Who knows? Have a great day, my friends. Take care.